Hello guys, in this video we are going to talk about the 5 best dividend aristocrats in terms of both dividend and stock growth. Before starting, let's first understand what dividend aristocrats really are. Dividend aristocrats are companies that have to satisfy 3 conditions. The first is that the company should be a part of S&P 500 index. This index contains 500 of the largest companies in the US. The second condition is to have a track record of increasing dividends for the last 25 years. So these companies have paid dividends even during economic downfalls and have not missed a single year. The third condition is to have a minimum market cap of $3 billion and 5 million in daily share trading value for last 3 months. If a company satisfies all the 3 conditions, then it becomes a part of dividend aristocrats. Now let's have a look at how the dividend aristocrats have performed as compared to the S&P 500. In the recent 30-year history, the dividend aristocrats with dividends reinvested have outperformed S&P 500 by a huge margin. So investing in these dividend aristocrats could have generated more wealth than normal S&P 500 index. The first on our list is Coca-Cola. It has a ticker symbol of KO and currently it is trading at a price of $55. Coca-Cola has a market cap of $237 billion and a P/E ratio of 22.37. For the last 10 years, it has generated a return of 47%. And let's have a look at the most important thing, the dividends. Coca-Cola has a dividend yield of 3.2% and has paid $1.76 as annual dividends. Their payout ratio is 70.49%, which is slightly high. The 5-year growth rate is 3.57%, which is barely enough to fight against inflation. But by reinvesting your dividends, you can boost your returns due to the compounding effect. Coca-Cola has a dividend growth record for the last 59 years, which means that it has increased its dividend every year for the last 59 years. It also shows that there is a high chance that the amount will keep on increasing in future. Coca-Cola pays out dividends at a quarterly basis. We can even look at the dividend safety score of Coca-Cola. Dividend safety implies whether the company will keep on paying dividends at the same rate in future. Coca-Cola has a safety score of 88, which is very safe. It is extremely unlikely that Coca-Cola will cut down its dividends in future. The second dividend aristocrat we will be looking at is Johnson & Johnson. It has a ticker symbol of JNJ and currently it is trading at a price of $164. It has a sky-high market cap of $432 billion and a P/E ratio of 16.38. The P/E ratio is close to 15, which means that J&J is fairly priced currently and is a good investment. For the last 10 years, it has generated a return of 128%. This is a solid stock from growth perspective as well as from dividends. J&J provides a dividend yield of 2.75% and has an annual payout amount of $4.52. The payout ratio is 43%, which is very good. The 5-year growth rate of J&J is close to 6%, which is very high in these type of companies. So J&J has done a wonderful job of achieving such a high growth rate. It has a track record of 59 years of continuous increasing dividends. The dividends are paid out quarterly. Johnson & Johnson has one of the highest dividend safety score of 98, which means that it is close to impossible for there to be any cutting in dividends. J&J is one of the safest dividend paying companies out there, a classic example of cash cow. The third stock that is on the list is Procter & Gamble Company. It has a ticker symbol of PG and currently it is trading at a price of $125. Procter & Gamble has a market cap of $298 billion and a P/E ratio of 21.36. For the last 10 years, it has generated a return of 82.41%. Let's have a look at the dividend information of PG. PG has a dividend yield of 2.92%. It pays its investor an annual dividend of $3.65. The payout ratio is around 60%, which is very good. The 5-year growth rate is 5.58%, which is similar to J&J. So this is surely a good return on investment, and with the added boost from dividend reinvesting, the returns will be amazing. It has a long history of increasing dividend payments every year for the last 65 years. So for the last 65 years, it has been increasing its dividends continuously. Let's move towards the dividend safety score. It has an amazing dividend safety score of 99. It is as safe as it ever can be. So no need to worry about your future dividend payouts. The fourth stock that is on today's list is Lowe's Company. It has a ticker symbol of LOW. The current market price is $189. It has a market cap of $117 billion, which is slightly low as compared to others, but still way higher than the minimum $3 billion requirement. It has a P/E ratio of 14, which is lower than 15. This means that this stock might be undervalued currently and could be a good investment. Its 10-year return is 478%, which is absolutely mind-blowing. And if we go to the dividend information, it has a dividend yield of 2.22% and an annual dividend payout of $4.2. The payout ratio is 27.19%, which is very good. The 5-year growth rate is 18.77%. This is way too good. And lastly, it has a dividend growth of 58 years. This stock has good growth as well as good dividend payments. This will keep on generating passive income for you every quarter, and at the same time it will keep on appreciating in value as time passes. A wonderful investment. Taking a look at the dividend safety score, Lowe's has a safety score of 85, which is low as compared to others, but still it is very safe. It is extremely unlikely for any cuts in future. The last stock on the list is Colgate-Palmolive. It has a ticker symbol of CL. The current trading price is $71. It has a market cap of $59 billion. The P/E ratio is 23.67. The 10-year growth rate is 32%. Now let's have a look at the dividend payouts. Colgate has a dividend yield of 2.64%. The annual dividend payout is $1.88 with a payout ratio of 60%. The 5-year growth rate is 3%. Colgate has increased its dividend for the last 58 years continuously. They pay out dividends at a quarterly basis. Looking at the dividend safety score of Colgate, it is 97. This makes the dividend payouts very safe and stable in future. So these were the 5 dividend aristocrats that have been performing good and generating massive returns for investors. We will focus on more such stocks in coming videos, so stay tuned. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.